There is simply no stopping the gold price rally, with equity markets largely moving sideways in India. The yellow metal is soaring high. International gold prices are also headed for the best annual return in nearly 4 decades. And it's not just gold. Prices of all precious metals are rallying this year. There are several reasons why. Investors are betting on safe haven assets because geopolitical risks to the raging wars in Middle East and Europe, and of course President Trump's constant tariff onslaught, attacks on the Fed, they've all increased the allure for precious metals. Will this rally continue or will we taper off from here is the big question, because we've had a couple of years of fantastic move, especially in the price of gold. This is the Editors Playbook. I am Prashant Nair, and joining me today are the editors Manisha Gupta, making a debut on this set here. Sriram Iyer is with us, Surabhi is with us, Nigel is with us as well. Guys, hi. Great to have all of you here on another edition of the Playbook. Manisha?
Yes.
It's your game
Welcome
today.
to the show.
Precious metals,
This is
gold, commodities.
Welcome to the
It's been
couch.
not a day, it's a week, it's a month, it's been a year. Quarter and everything, and yes, and beyond. Well, if you look at the last couple of years, absolutely, it has been all about gold. It's almost doubled in this time. And as Prashant said, this is the best yearly return that we are seeing since 1979 for gold and for platinum. For silver, clearly, it's the best yearly gain in last 10 years as well. And such huge buying. Prashant, you mentioned a lot of points there, but let me add that de-dollarization to it and the way the central banks have been buying. The ETFs latched on much later, and this is basically ETF buying that we are seeing right now. So every dip is getting bought into. There was a time, a couple of months ago when we did not see any sellers at all. $10 of a decline, and you had more buyers grouping in. So that's the kind of scenario that we have seen for many of these metals there. Interestingly, let me tell you one more thing here. If you look at post-COVID, there was no demand for crude. But come 2020 and 21, you saw the crude prices coming back from that brink of collapse to $113 a barrel there. So 2020 and 21 belonged to crude. Then 2022 to 25 has belonged to precious metals. Gold, silver, platinum, palladium, we've seen all of these precious metals kind of double. Now, 2025 to 26, 27, the belief is that you could be looking at base metals gaining. Copper is already started in that note, and the next, perhaps, rally could really belong to base metals in that sense. So let me tell you, it has been commodities all the way.
So gold is precious. I mean, the consensus you're picking up is precious metals maybe best.
It's not done, but after you've done 50 to 60% of gains, that is not what you're going to be seeing every year. This year is done with that. You could be looking at 15, 20% of gains continuing for many of these precious metals, but that huge bull run will now come for base metals.
It's interesting.
I mean,
Manisha
it
says
all
that
depends on Trump also.
Everything depends on him.
as Manisha said, 2020, 21 belonged to oil.
Yes.
But they were in 22. There was a start of that now 3-year-old war, Russia-Ukraine.
Yes.
Right. Yeah. And I think that really, right, and that seizure of Russia's gold by and reserves by Russia, the US. I think that really shook people up.
It started it, yes, it did.
That perhaps was the kind of a trigger which really has not stopped till now.
Not at all. You know, another thing that I have to tell you, Prashant, is that during COVID, many people thought that food is going to be the next thing to watch out for. But as we came out of COVID, what sold the most? Gold, jewelry, and diamonds. Yeah.
And Indians own a lot.
How do we explain that? What's the...
I'll come to this, because you couldn't go around. There was no travel. So that vengeance buying, if you had to give something to somebody, you weren't going to travel and buy cars because that wasn't happening. So I think what was getting bought was real estate. People were buying those houses, and then people were buying diamonds and jewelry.
I didn't buy any of that. So
But central banks have been buying a lot of it, Surabhi, right?
Oh, yes. So I looked at the World Gold Council's latest survey, and they do one every year. They've been doing it for 8 years. Their 2025 study is really interesting. They surveyed 73 central banks. And guess what they're saying? 95% of those central banks expect the buying to continue in the coming year as well. This is despite record purchases in the last 3 years. So central banks, at an average, have been buying 1,000 tons every year for the past 3 years. Versus, and Manisha would have the numbers, absolutely spot on. But I think average buying would be around 500 tons. Last 3 years, they've bought 1,000 tons. That just explains where this massive, humongous trigger came in. And then the funds and the speculators and then retail investors, everybody kind of latched on. The other interesting piece that I just wanted to throw out there when we're talking about, let's look at historically what has happened. When is the last time we've had such a massive move? I looked at data which goes back about 2 decades, and actually 50% at least I didn't find in this particular study. But if you look at, so what do we know? We know that gold and US interest rates technically, academically, are supposed to be inversely correlated. But does that correlation always play out? Actually, no. The gold market is absolutely crazy. It's a market of its own. Let's actually get that table if we can to just get a sense of if there's any pattern to this. Now, let's talk about the Russia-Ukraine war. Prashant, you brought that up, right? During that year, 2022, the Fed hiked interest rates to the extent of 425 basis points. Since there was such a massive hike in interest rates, gold prices should have crashed. Did they? No. Gold was very flat. Why? Because there's this element of risk. There was also a risk-off environment. Asset classes were going haywire, so people were not looking to sell gold. Now let's go back and, look at the 9/11 terror attacks time, 2001. At that time, because there was such disarray everywhere, the US central bank cut interest rates in 1 year, in 12 months, cut interest rates by almost 475 basis points. Gold prices should have absolutely shot up, gone through the roof because interest rates are falling. But again, it doesn't work. It's not a one-to-one correlation. Gold prices were hardly changed, 1%. COVID is the other interesting example. In 2020, general risk-off, and gold prices were up 25%, and 24 as well because of geopolitical tensions, West Asia, Israel, Gaza, so much going on. There was a 27% up move, and on top of 2024, 27%, 50% in 2025. I'm breathless. I'm pausing here.
Basically, if the world is going down, then what will you do with the gold?
My point is, I don't know how to, if anyone can predict this, I think Manisha is the only person who can predict where gold is going.
Another correlation to look at, I thought maybe we should, after tremendous periods of gold price move, so if gold is the ultimate safety asset, right, safe asset, I mean, does it tell us a big rally in gold? Does it tell us something about what, say, risk assets like equities do? I mean, going back 25, 30 years, I remember looking at this data, and the data is stark. I don't have it right now, but the other point about central banks, Surabhi, last week.
Let's stay with that thought for a bit. So, does this rally in gold tell us that we are doomed?
No, it doesn't.
Look at equities.
No, it does not.
No, look at equities. Look at the S&P 500.
I know the answer is no, but I would like you to articulate why we are. Is there a US recession coming?
Before we started recording this, we started talking, you said there's a 30% recession chance in US. So that is something that the markets are not talking about so much right now. Labor concern, yes. Recession concern, no. And is the reason we're looking at gold steadying where it is. I still want to get back to that same point, telling you that everybody wants to buy gold right now. Central banks is one, but retail, ETFs. So when I talk about the Indian markets as well, when we are the biggest consumers here, if you talk about today, and I was talking about this festival season as well, traders, bullion dealers, wholesalers tell me that bullion is at a record demand right now. So people are not buying so much jewelry, but they are buying bars and coins. And physical market in India right now is trading at a premium. Okay. So everybody seems to be latching to this.
I think the corollary to that is essentially the gold price rally this time is not a reflection of a doomed world, because the rest of the metals are also rallying.
But I think I'll leave that thought for everybody. Prashant and Nigel, I think maybe you want to weigh in as well. Is the gold market sensing something that the equity market cannot even fathom at this point? Who knows? Who's to say? We'll only know in hindsight.
I'll just make one point. The Morgan Stanley CIO had put out this note, and I think close to around 2 weeks or so ago. And normally an ideal portfolio is 60% in high quality equity and 40% in high quality bonds. What he's calling for is not the 60-40 now. He's talking for the 60-20-20. That is a proportion of that high quality bonds moving into gold. Okay. So it's instead of being at 60-40, now he's talking about 60-20-20. And also, another note came in from Goldman Sachs. They said, if just 1% of US households' bond holdings move into gold, gold prices could move to around $5,000 from this $3,800. So, basically it may not be equity versus debt. It could be a proportion of the debt or of that safe portfolio that starts finding a higher allocation in gold. Absolutely. So the bit of a drift out there.
Very, very interesting.
And that would happen only if you lose trust in the US Treasury.
So,
not necessarily.
I'll go back to
There is a fundamental concept, right? It's gains beget gains. Yeah. If you think something is going up, more people share. By the way, there is now evidence to show that when you talk about, as Nigel said, commodity AUM is this much. There are commodity investors. There are equity investors. But what has happened now in the last 2-3 years is a lot of non-traditional commodity AUM. When I say AUM, I mean money which typically goes into commodity, goes into other stuff, is coming into commodities, into precious metals, etc. And that is just a function of something goes up a lot, you want to be a part of it. There is a fair bit of FOMO, etc. Even in India, Surabhi, last week we did rupee. the proportion in terms of our reserves, the proportion of gold has gone up.
Yeah.
See, but that is again a lack of trust in
No, so I'm going back to the...
It's a function of the price gain because what we get is the value,
Yeah.
dollar value.
Yeah, yeah.
So as price goes up, the value of your existing
holding
cost,
also
but
goes up.
also the stock of gold that we have. I think it's both.
Yeah.
It's gone up here quite substantially.
Yeah.
So we want to,
I'm going back to the World Gold Council survey. One of the other questions they asked these 73 central banks is that will your holding of dollars reduce in the next year? A large proportion of them said yes.
Yes.
Okay.
So they are diversifying, and gold is definitely an asset that they have diversified into for the last 3 years. Now, at an individual level, they were asked that, individually at your bank level, will you still buy more gold next year despite the price, right? 43% of said, yes, we will keep
I
adding
would
to our
want to
holdings.
add to that. This is a year when you have seen, on an average, 80 tons of buying from central banks every month. This has never, ever happened. There have been months where there has been a pause. There have been years where there's been a selling as well. But this is a very different criteria we're looking
Which
at.
is what I'm saying. Are they, and I'm not saying central bankers are smarter than equity bulls, but I think it's a great debate. We'll have some answers, whether they're
They are
sensing
privy to
something
information.
on either US treasuries or the US dollar.
you know,
There is a need
it's
to
not about
diversify
smarter,
to
Surabhi.
this.
It's not about smarter. They are privy to information that
Obviously
equity
they are.
investors
They know
don't.
everything. They run the system.
Correct.
The
They
kind
are
of
the
monies
system.
you can't even...
So let me bring a different angle now into it. Since we already spoke about the central bank buying that's pushed up gold prices, let's talk about the gold ETFs and the correlation with gold prices. I think the first gold ETF was launched in 2004. So if you just plot a chart between 2004 and 2021, there's a definite correlation. As gold prices move up, the gold ETF in tonnage as well moves up. Now from 2021, that correlation got broken. What happened? Gold was roughly around $2,000, $2,100 per ounce, while the total gold ETF holding, at that point of time had hit close to around 4,000 tons. Now what happened? Then we saw some kind of downtick in terms of tonnage, but gold prices continued to move up. So gold prices effectively, from the time that correlation broke, gold prices are up close to around 80%, and the tonnage that was 4,000 tons, it came down drastically, and the last few months it's being steadily moving up. But still, it's at roughly around 3,800 tons. So we're still not at that 4,000 tons odd. So you talk about a left out feeling, the gold ETF, that in fact is yet to hit those in tonnage terms, what we saw close to around
this is
4
gold
years.
prices and
gold prices and
tonnage
gold ETF,
held by,
gold ETF.
gold-
Gold ETF tonnage, which
ETFs
is
hold less gold now, but at a higher price.
yes, the price has moved up. So that correlation, the chart is telling you the picture. That correlation got broken. Normally, you see both of them move in sync. From 2021, it got broken, and in the last few months, you have seen that the gold ETF tonnage again has started moving up. But even after this up move, it's still at 3,800 tons. That compares with 4,000 tons earlier. So left out feeling. Gold ETFs, they will be feeling that left out feeling because the central banks have been the one that have actually led the way.
So for those of us, like for the middle class audience who think they've missed out on the rally,
Yeah.
even the big money people are feeling FOMO, so you're not alone.
Also,
was the
so
last
you're
one
okay.
to start coming into this rally.
Here, I was looking for the stat, I found it. I'm going to quote it because it really caught my attention. 73% of global central banks, and this is a survey of 73 central banks, including the biggest of them all, see moderate or significantly lower US dollar holdings within their reserves over the next 5 years. Where is the dollar going? If you go by this survey,
So I can tell you, I can add on to this one, a lot of people that we speak to internationally, whether it's about Bank of America or Goldman Sachs or Citi for that matter, believe that US dollar is still overvalued anywhere between 10 to 15%. So if that is what we're looking at, I mean, it's an easy calculation then.
priced in dollars, right? I mean, so as dollar goes down,
Right? Like
there's-
this was
gold,
the dollar, right? Exactly. Yeah. Great minds think alike. We're on the same point, right? If Trump wants dollar to be weaker, gold is going to cost more, and he's likely to push it down further. And there are these conspiracy theories. I mean, they are theories. I don't know if it's a conspiracy that he wants to sort of go towards crypto, and the signs are that he is. And it's not just other central banks. Maybe the Fed will also have fewer treasuries, fewer dollars, and more Bitcoin.
I think Manisha mentioned what has happened this year, and that maybe that table will come up. It's a table that I go back and look at, which is nothing. $1,000 in 2008, price of gold. $2,000, 12 years it took for gold to reach $2,000. And from 2,000 to almost $4,000, it's taken basically not even 5 years, right? So that's the table. And I think, Nigel, that is the reason. It's this sharp appreciation we talk about this wealth effect.
Yeah.
Feeling rich, right?
Yeah.
Being rich and feeling rich is different.
Correct.
Right? But feeling, price is going up.
Because I've got that feeling.
And I'll tell you, like most of these planners, because I look at personal finance as well, and for years you have planners coming on and saying that look, it's a physical asset, and how much of gold, and as Indians we're anyway overexposed.
Doesn't give you dividend, doesn't give you premium.
Be in equities, long-term wealth creation. So people are feeling quite miserable this Diwali, exactly because of
But I'll tell you, wait.
because not too many would have had a 15-20% exposure in their overall portfolio to gold. And look what's happened.
But I'll tell you what should be. We spoke about central banks, right, with regard to buying gold. We spoke about gold ETFs as well. But Indians are feeling rich. And you will say
the ladies.
The Nifty is down close to 3.5 to 4% in the last 1 year. How can Indians feel rich? Because gold prices, as you all have been talking about, 45 to 50% higher, right?
Ladies
and why,
always know best.
Why? Because Indian households, on the whole, what, 25,000 tons?
More than that.
Conservatively. I mean, because I'm just going by, importing roughly around 500 to around 700 tons per year. So in the last few years, it's 18,000 tons. And prior to that as well, there would be so many tons of gold. So you just take a number of 25,000 tons, conservatively, you multiply it by the current price of gold.
Oh,
What do you get? 290 lakh crore.
A massive number.
Last year, what was it?
more than our GDP.
190 lakh crore. No, it's almost there. So last year it was 190 lakh crore, this 25,000 tons. This year it's 290 lakh crore. That means 100 lakh crore of feel-good effect.
On a lighter note, I think the government of India would be thanking its stars that it stopped the sovereign gold bond scheme.
Oh, no, that's entirely different.
Wait, let's
Imagine a 50% appreciation
But
in a
just
year.
let me add to that. And as he mentioned, we import nearly 500 to 800 tons. It's more between 600 to 800 tons of gold every year. But when you look at silver, we do 5,000 to 6,000 tons of silver every year. So that's a different market altogether. And
Silver is we have to go deeper. On the gold returns part, if you had bought in 2008 when Prashant mentioned, the CAGR on gold is about 8.5%. You add a 4% annual depreciation in the dollar, you get more than what mutual funds promise you when selling you that, right? Just by sitting there and you have the gold. But of course,
you should sit closer to where Manisha ma'am sits in the office.
Exactly.
Every Diwali she's told me for the last 10 years, the Nigel, thoda lena, bahut kam liya yaar.
Sriram, you're looking at Bitcoin.
Anything.
Abhika, is Bitcoin the new gold?
My role is to give something different.
So what does the data say for Bitcoin?
So Bitcoin was supposed to be the new gold at the start of this year. So far, it has slightly disappointed. It hasn't. Gold has run away because of central bank buying. But I think something else might be coming because the December quarter, if you look at the last 5 years, has been the best quarter, except in 1 year where there was some profit booking, I think. Otherwise, every year, October, November, the OND quarter is the best for Bitcoin. So you never know, by the end of this year, it might catch up. And Bitcoin itself has I have some data.
Data shows it's done very well.
It's not as done. See, typically Bitcoin Gold have done, similar.
Are there CAGR since?
Yeah, exactly. So the 51% gain since 2017, 15 for gold.
Is massively
it is.
Correct. But in this year, at the start of this year, when Trump took over and people thought the move to crypto and Bitcoin will surge, it hasn't. The gold has surged faster.
Those expectations, it hasn't.
Correct. But then the next 3 months will be crucial because the winter, the Bitcoin gets the hottest when the temperature is the coldest. So I think that's an interesting bit to watch out for. And in terms of how many gold ounces, this is an interesting data I pulled out. How many ounces of gold do you need to buy Bitcoin? Even after the gold run up, in 2017 it was 3 ounces. Today it's 30 ounces. You need 30 ounces.
Bitcoin is hugely outperformed.
Exactly. Even when gold is at a record high, you need 10 times more gold to buy 1 Bitcoin.
How many Bitcoins you have?
Oh, me? As much as RBI would allow me to.
But I just want to add into what he said. If you look at the last quarter of 2023 and 24, Bitcoin has given you anywhere between 38 to 45% of returns in that one quarter. And 2025, with the kind of gain that we've seen in September, this perhaps could come true again.
In a way, it's a new world, right? We're talking about there's all kinds of stuff happening, and this effort to mainstream Bitcoin, crypto, whatever you say. I mean, there are large global banks who've got desks, shops set up now trying to do all of that. It's a complete, and I think Manisha covers it quite extensively. But I think Bitcoin, new gold, but I think silver, Nigel, that's the other one.
You know, silver is at a very, very crucial point. First, let's tell everyone what we already know, right? If you look at the gold to silver ratio, you know, it had gone to around 95 to 100. Now, that's cooled off to around 80 because now silver has played catch-up.
That is gold divided by silver.
Yes, gold divided by silver. It's currently at around 80. Some argue 60 to 70 is normal. Some argue 50. Now, it depends on what you think about it. But anyway, from 100x, it's come down to around 80x. And we know silver is that, you know, industrial commodity as well as it's a precious metal. And as, you know, we have been talking about, it's used in 5G, in EV, in solar cells as well. That's what we know. But this is the interesting aspect. You know, when I was born, they said that, you know, a few years before that, silver was at around $50. That's many years before I was born, 1980. many years before that. Okay, now check it out. Okay, so in 1980, the Hunt brothers, I think if I remember the names correctly,
Hunt brothers, yes.
William as well as Nelson, they, you know, tried to corner silver, and then you had that big spike up.
Yeah.
But what happened? Once that fizzled out, we had a sharp decline in silver prices. Then came 2011. When again you had a lot of speculative action, people said now, half century, it's in fine form. It's going for the 100. Again, that rally fizzled away. And now come 2025, silver's at that crucial juncture. They're at around $50. So, you know, in that context, silver's at a make or break mark. You know, you say in cricketing parlance that the batsman's in good form, has made a half century, time to build on to that. Can it move towards a century? And this is the third time that it's moving towards that $50, you know, per ounce.
Yeah.
So, and in the same duration, just take a look at what gold has done. You know, in 1980, gold was what? Approximately $800, right? In 2011, when silver hit $50, you had gold that danced away to around $1,800. And now gold is at $3,800, but silver, 50, 50, 50.
Getting out every
Can it go ahead and build a big one out here? So that's why I'm saying that $50 mark is very, very important.
I have to tell Nigel this.
Nigel is speaking like Manjrekar here because I don't know if he's a silver bull or not. He said everything.
He's saying silver has gotten
let's
run
ask
out. Yeah, every time
last
at
word to
50.
you. What do
Yeah,
you
so now abhi silver ka
So
kya?
I'll tell you, when we hit $50 an ounce in both those scenarios in 2008 and in 2011, silver corrected very, very sharply. We went into teens after that. Because both the instances when silver ran up like that, the fundamentals were not so supportive. It was a move market. But this time around, 5 years of deficit, strong industrial demand, diversification, and central banks should be, by the way, are not just buying gold, they're buying silver as well now.
Yes.
So this time around, we'll do $50 an ounce, but we won't go back to teens or 20s. But we can go back to 30s perhaps, and that would be the time to absolutely fill in silver.
Data centers also need
No, sorry, you're saying silver heads down to
It would. It always has. Because every
But it
time
won't see that kind of correction that it saw in the past.
It will not see teens and 20s. It's matured now.
Whereas in equity parlance, we say buy the dip.
Buy the dip, basically.
And the next 2 years, perhaps,
not
you will be
supposed to say
much
those
beyond 50, yes.
So no advice here, but you're saying, for those who are watching, right, I mean...
just going by the data is there, it will see a correction again, but not to those kind of
But
levels.
those of you who are CNBC-TV18 subscribers, if you were a subscriber a few months ago, you would have caught at least half the rally.
Right.
Out of the silver prices have gone up 30% and more since the time we highlighted a bunch of opinions on this and we showed that silver will go up. And we called it just the beginning of the rally, and since then it is up 35%. If you haven't subscribed to Access, now is the time.
Well,
Absolutely.
there
Make sure you do that.
That's a perfect note to end the conversation as well. Sriram, Manisha, Surabhi, Nigel, thanks very much, all of you, for sitting down here. We will track the price of precious commodities, precious metals. You heard lots of opinion, lots of varied opinion here. I hope that was useful, insightful. It was enjoyable for us. Thanks very much for staying with us.